Okay, let's go ahead and get started. Once again, thank you everyone for attending. Today's webinar is Data-Fueled Customer Engagement and Untapped Opportunity in Banking. This is brought to you by Data Source Consulting and EXL Company. Our speakers today are Bryson Dunn, our MDM and Data Quality Competency Lead, and Asif Gatala, our Financial Services and Retail Lead for Data Management. First, let me tell you a little bit about Data Source Consulting and how and why we know about this topic. We're a pure-play enterprise data management, modern data architecture, and decision intelligence consulting firm. We offer both strategic services like data governance, vendor evaluation, and data virtualization, and the implementation work in architecture, cloud and BI, data quality, decision intelligence, and of course, MDM. We were acquired by EXL Service in 2016 as part of their analytics arm, so we're really excited to now be able to offer the end-to-end solutions from managing enterprise data to providing the deeper business insights. So let me introduce our speakers, Bryson and Asif. As Data Source's MDM and Data Quality Competency Director, Bryson is accountable for overall project success, establishing delivery methodology, attracting industry-leading talent, and bringing technical and vertical solutions to market, as well as driving the business development. He's based here in Denver, and Asif is head of enterprise data management for banking and financial services and retail, and is part of the analytics leadership team for these verticals. Over the past 10 years, he's led multiple engagements to help our clients minimize risk, boost efficiency, create regulatory compliance frameworks, simplify supply chains, and identify new channels for growth and profitability. He is located in New York near our EXL headquarters. So again, thank you all for joining. I do want to mention that if you have any questions, you can utilize the questions field at the bottom of your GoToWebinar panel. We'll address those in the Q&A during the last 10 to 15 minutes of the session. And this session is also being recorded, so if you would like to view it again, or if you know anyone who would like it who missed it today, we will post that to the website within the next couple of days here. So with that, I will turn it over to our speakers.
Hey everyone, Bryson Dunn here. So a quick review of the agenda that we'll be covering today. First, we're going to outline the problem. What is so challenging about managing and extracting value out of your data in the banking industry. We'll talk a little bit about the solution, specifically how to manage customer data effectively and how to use analytics to drive the customer journey, before talking about some of the value that can be achieved with that and how to get started down that path.
Hi everyone, this is Asif. Before we get started on omni-channel engagement, just wanted to start off with digital transformation, right? Today, as we are at the dawn of the 2020s, digital transformation is all around us. Yet there is no standard definition of what it means, right? When you talk to practitioners, some would take a more inward-looking view that would define digital transformation as a combination of people, process, technology that comes together to enable certain outcomes. On the other hand, there are other practitioners who would take a more customer-centric view, which is a more outward-looking definition. But the one that I like for its simplicity and completeness is by Professor Kane of Boston College. It does not focus so much on what the transformation is or why it's happening, but then it takes a view of how you need to respond, right? So it talks about, irrespective of who initiated the change or whether you like it or not, as a business enterprise, what is it that you're doing to react to those changes so that you're able to play the trend to your advantage, right? So over the next few minutes, we'll be discussing about how banks could take advantage of the digital transformation that they're experiencing, and then how they could prepare with certain capabilities in place to take advantage of this trend. So before we actually go into the topic itself, right, there are a couple of trends that I wanted to talk about, right? I mean, some of these are pretty obvious, but then when you look at the numbers, you realize how the world is changing, right? So the first thing that the first exhibit that I wanted to focus on was the use of digital channels is on a steady rise, right? So, I mean, obviously it shouldn't come as a surprise to you when you look at some of these numbers, especially if you look at transactional products, lending products. You see that the use of online banking and mobile banking is trending in the 40 to 50% range, right? So this is the number of interactions that customers have with their banks through these channels. But the one piece that was pretty interesting to me, and it was as you go right to the bottom of this page, right? So when you look at advisory products like wealth management, brokerage accounts, including retirement planning, some of those are pretty high-touch areas of banking, which normally you would expect that people would want to be in a bank branch talking to somebody or on the phone talking to their trusted advisor, right? But then if you look at some of those numbers, especially towards the right of that bar, we're talking about like more than 30% of the interactions in this year have been through mobile and online banking channels, right? So that basically gives us a view of where the future is headed, right? So when people start to trust digital channels for advice on where to put their money, you pretty much know that some of the more transactional products are going down that route and going there pretty fast. And then the next trend that I wanted to call out was across all of these channels, right? Contact centers, branches, ATMs, online, and mobile. How often do people interact with their bank or the financial institution, right? So the interesting thing to me was actually the right end of this, of all of these 5 bars, which talks about how many customers interact with their bank more than 10 times a month, right? If you look at it, as you go down this list, as you go to online banking and mobile banking, you see that more than 20% of customers actually interact with the bank 10 times or more per month, right? That, from a bank's perspective, is huge because especially if you want to use every touch point as an opportunity to educate your customer, interact with them, and to wow them, if you have a core strategy in place, how you want to latch on to triggers or signals that they're sending and have a strategy in place how you want to react to those, I think it's a huge opportunity, especially in these digital channels.
So what we want to illustrate here is the magnitude of the complexity that comes with digital engagement, omni-channel engagement, really as a whole, whether the customer is interacting with the bank in branch, through an ATM, a call center, one of the more digital channels, or even through direct mail. You need to manage these channels seamlessly, and that alone can be a major, problem to overcome. But in addition, you have, different phases of, the customer life cycle and the activities that the bank is doing to support the customer, which may be different depending on the type of product that you're selling to the customer, the system that, is being used to facilitate those processes, and, the business process that is happening. You'll very likely have completely different people interacting with the customer, managing customer data, and potentially with very different ways of doing so. And so all of those different things kind of converge, and it basically leads to a very complex picture, both technically and from a process perspective, that needs to be managed in order to achieve a consistent customer experience. So overall, when we talk to our customers and they are starting a digital transformation journey, there are a few things that come up consistently. Folks have low confidence in the quality of their data. It's highly labor intensive to manage that data or to make use of the data. Maybe the data isn't available, or it's in an incorrect format, or maybe there's low confidence or it's incomplete. And there might also be circumstances where the business doesn't know where the data came from. It's a black box. It may be incorrect, but they don't know why it's incorrect. There are a number of root causes for some of these challenges, including the data being trapped in silos. The data is not integrated properly. The data is taking too long. The reports aren't what I need. The data doesn't reflect what I know about the customer, or it's just not in a consumable and user-friendly format. So these are all very common problems that we see when we go to our customers and we talk about some of the data challenges that they're facing today. And what this ultimately leads to are a number of negative consequences when it comes to customer engagement, customer satisfaction, and even efficiency of the business. It can take longer to resolve customer queries. For example, perhaps an accidental payment that needs to be reversed or applied to a new account. The customer can often wait days or weeks for that to occur, and which is obviously not positive for the experience that the customer is having for the bank. Oftentimes, and I think I've personally had this experience where you are a long-standing customer of the bank and you have transactional accounts with them, but you go to apply for a loan or a mortgage and they ask for all of the same information again. Not only is it slightly annoying, but it's also effort intensive to fill out the forms, to enter that data again, when the bank already has a long-standing relationship and knows all of that information. Another one I'll call out is suboptimal management of risks and exposures. Some of these new fintech companies are increasingly using non-traditional sources of information to establish credit and a basis for lending, where traditional banks may wait for a 2 to 3 year credit history. If we know that a medical student recently graduated and they maybe don't have a long-standing credit history, but we know that they have a significant opportunity in terms of lifetime value to the bank, we may go ahead and lend to that person, even though it doesn't necessarily fit our traditional model.
Yes. Moving on from some of the challenges that we've seen with the customers that we've worked with, we also know that on the other end of the spectrum, there are financial institutions which have well laid out strategies and roadmaps for omni-channel customer engagement, right? So let's have a look at how they go about it, right? So again, since the focus of today's discussion is about customer engagement, so we'll just focus on customer management and digital engagement, right? Different banks, different financial institutions might define what customer management and digital engagement is many different ways. But then in our interactions with most of our customers, we come across certain core capabilities which banks are trying to create, which cuts across all the silos which Bryson mentioned, right? So across product lines, across channels, across different functions within the bank, to be able to cut across all of those silos and be able to manage customer as one entity, right? So from a customer management perspective, you want to make sure that you have a strong analytics capability and being able to cross-sell, upsell to them, be able to estimate their lifetime value, be able to predict churn, grow spends and balances that they have with your bank. And again, from a digital engagement perspective, you want to make sure that end-to-end you're able to own the customer experience and be able to pick triggers that they're sending to you and then be able to react to those, right? And in every single one of these cases where we're trying to enable this kind of customer engagement framework, we want to make sure that we have a core foundation of data, right? So you want to make sure that there's a solid data strategy in place. The data is architected in a secure environment. And then you have a strong data governance program in place to make sure that all the data that's getting captured, integrated, and then organized and being made available for downstream consumption is all high quality and then continues to stay that way, right? So you want to make sure that if a bank or a financial institution wants to focus on the customer engagement across channels, you just want to make sure that you have a strong foundation of a data environment in place, right? So, and then obviously, once you have your data infrastructure in place, which feeds high quality data on demand to your downstream consumption needs, you're able to support multiple other use cases as well, right? So whether you're trying to have an organization that focuses on new product launches, you're focusing on optimizing your acquisition strategy across your suite of products, or even if you're thinking about developing models to support your business decisions, and therefore, and obviously regulatory compliance as well, right? So,
yeah, thanks, Asif. So what we want to focus in on today are two crucial aspects to that overall picture, and those are Customer 360 and analytics. So what we're going to talk about here is what a 360-degree view of your customer means to us, which, you may hear this term through different vendors or practitioners in the area, and they'll be talking about slightly different things when they say Customer 360, but to us, it's consisted of four important aspects, particularly for the banking industry. The first is the customer profile. You need to know who that person is, what their name is, what their contact information is, where they live, potentially where they work, what are their demographics and preferences. From a privacy perspective, there may be opt-in and opt-out considerations as well. You also need to know what products they own, how they interact with your bank, how these individuals interact with your bank. That could be through checking and savings accounts, of course, loans, mortgages. What are the different assets that they hold that back those loans and mortgages? That's all important information to have about your customer. And then taking that a step further, advanced banks will also have a view of the relationships that a customer has. So from an individual's perspective, what is the household that they live in? Who are their family members? Who are their relatives or co-signers? And what that allows you to do is to identify new opportunities or upsell based on anticipated life events, for example. You also have engagement data, what we broadly call engagement data. And this is essentially describing all of the ways that a customer interacts with the bank. That could be through making payments, withdrawals, could be making account actions, opening or closing an account, could also be posting on social media or viewing a product on your website or logging into the mobile app. So all of those different touch points of engagement, all of those different events that occur related to a customer is also certainly within the purview of Customer 360. Now, analytics is really built on top of that foundation of customer data. And it fuels a number of insights, and this isn't an exclusive or comprehensive list, but things that analytics might fuel are personalization, figuring out what the next best offer for a customer is, what the next best interaction is or touch point is for that customer. And when you do decide to engage with that customer, how do they like to be contacted? Do they prefer a phone call, a text? Is it best to give them a notification to their mobile app, or maybe it's sending them a piece of mail traditionally? And also what time of day, right, they might like to be contacted through. And what that essentially does is make sure that your engagements are optimized and that you have the highest chance of positively influencing the relationship and getting the actions that, the results that you intend by those actions. And then lastly, segmentation. So this allows you to better understand your customers beyond just the who, what, and where type of attributes you might have. Understanding, based on what we know about this person, what do we think their overall value is to the bank? What is their propensity to churn or to re-engage? And those two things in combination can be particularly powerful, where you say, if we have a person who is of high value to the bank and they're at risk of churning, we're probably going to invest significantly in retaining that customer. Whereas if you have a fairly low value customer that's at risk of churning, maybe you don't invest as much in retaining that relationship. So overall, these descriptive, predictive, and prescriptive types of insights and analytics are what we talk about in this context. So on this next slide, this is what the end state looks like. This is the vision that we bring as a starting point for our customers, and it's fairly high level intentionally because obviously the IT infrastructures at banks can be unwieldy, complex, and sprawling. And so this is very abstract, and it's what we call the data layer approach. And what you can think of in this approach is that the data layer is an abstraction between the systems of engagement, the back office applications, and then any second and third party sources of data that the bank may need to handle. And what the data layer does is it enables the management of data in a way that is consistent with the business and is not necessarily tightly coupled to any particular core banking system, general ledger, or CRM. It really reflects the way that the bank does business and not any individual channel of engagement or application that may be in use at the company. And some of the key aspects of the data layer are, of course, the Customer 360 and advanced analytics components that we discussed, but it's also worth noting that there are several other important aspects that we're not going to go deep on in this webinar, but I certainly want to call out. And those are lineage, right? Lineage, understanding where the data comes from, where it originated, and how it's been transformed along the way within your organization. Security. Data breaches are, of course, the top of mind for everybody these days. And, of course, security needs to be built into every aspect of data management, whether the data is in flight, in motion, or at rest. Quality of data is also extremely important. Not only being able to measure and validate your data to ensure it's accurate, current, complete, and correct, but also to be able to automatically remediate your data or route that data to humans, data stewards, for review. Data privacy is also top of mind for many folks today, with GDPR and CCPA ready to take effect the first of the year, and the other legislation that's upcoming in New York and Nevada and other states, and presumably federal legislation soon to follow. Privacy needs to be a design consideration from the front, from the start. You also need to integrate your data and govern your data. Governing your data is all about making sure that you are defining your data and managing it in a consistent way, and that it's defined, right? The management, the people and the processes that are responsible for making decisions about that data, for maintaining the data, etc. So what that enables you to do is to be very flexible, right? If you have this data layer approach, you can upgrade your CRM, potentially switch CRMs. Say you're moving from Salesforce to Dynamics, whatever the case may be. Perhaps you have, you're adding another regional CRM because you're expanding globally. It allows you to easily plug in different systems and components without impacting the broader landscape, because you have this loosely coupled architecture. And so what this ultimately addresses is, the issues of having confidence in your data, having data that's, maybe not available in a timely fashion. It provides some transparency into the data as well through lineage and governance. And it also enables the elimination of a lot of manual effort. Having all of this data in one place and managed in a consistent manner will unlock some of the potential for automation within your organization. So what I want to talk about now are the 3 steps that you need to take to achieve a 360-degree view of your customers. The tip of the spear is integration. You cannot have a 360-degree view of your customers unless you integrate with the systems and applications that data is being collected and managed in. So that includes first-party data sets, the data that you as a bank collect about your customers, but it also includes second-party data, right? The data that other companies that you partner with collects, and even third-party data that you may purchase from data aggregators. All of that needs to be integrated together along with social, transactional, engagement data from online and offline systems, right? This means traditional brick and mortar types of engagement, as well as through the web and mobile. Also through hybrid cloud infrastructures, whether it's on-prem or in the cloud, you need to be able to access that data and manipulate it. So that's the tip of the spear, the integration component. Underneath that is management, which really enables data governance. The management aspects can include workflows. When an anomaly occurs, who is that? Who is brought to attention for that? How is it remediated? Is there any sort of approval process or escalation step allowing you to consistently manage the data? Another one I'll call out is reporting and visualization. Being able to view the data and to visualize trends in the data is crucial. And then lastly, I'll talk about harmonization. This is the third step of the 360-degree view. Harmonization means resolving different structures, formats, or even meaning of data that exist between applications, between sources, to come up with a single version of the truth. Different groups within the organization will have different understandings or definitions of something as fundamental as a customer name sometimes. And those differences need to be resolved if you are to establish a enterprise single version of the truth for your customers that your data and analytics are going to be driven by. So things that are important there are the hierarchies, relationships, and taxonomies of your data, making sure that those are managed in a consistent way that reflects your business. Make sure that the life cycle of your data as a customer, as an individual, moves from an anonymous person that maybe clicks on your website to somebody who is known and is interested in purchasing a product or signing up for a product, to a long-time customer who you're interested in retaining. So making sure that the data is managed in a way that is consistent throughout that life cycle, which often involves both master, reference, and transactional data.
All right, moving on, right? This is the part that's most exciting to me, right? So because, in my work involves working with banking and financial services firms and the retail industry as well, right? So I like to draw parallels between the industry and try to cross-pollinate best practices across both, right? So now that you have a core foundation of customer 360 and core analytical capabilities, which can drive business decisions, when I talk to a retail executive or my clients in the retail space, when I talk to them about what could you do from here, right? The language that they talk about is pretty similar, right? So they talk about customer journeys and they talk about wallet share and then making sure that they have the highest recall across all competing products, right? For example, if I talk to somebody, I'm just going to use hypothetical names here, a Walmart or a Target, right? So they talk about customer journeys and they're going to talk about all the different offerings that they can offer their customers right from a cradle to the grave, right? They're talking about their needs will keep evolving over time, but then we always have something we can offer to them, irrespective of which stage of their life cycle they are in, right? But then, unfortunately, when I talk to my clients on the banking side, depending on who I'm talking to and what their role is in the bank, they would still talk about customer journeys. They would still talk about things like wallet share and how they want to be top of mind recall, but then it's in a very limited and a narrow focus, right? Like, for example, a credit card executive might talk about how do I optimize their spend with my credit card? How do I make sure that if they have multiple credit cards, how do I make sure that I have a more wallet share, right? So one of the things that we think is the future is being able to cut across all the silos of different suites of products which banks have to offer. When they talk about customer journeys, map it out right from a young adult when they become a consumer of your products making independent choices all the way to the end of life, right? So be able to map out different products that your banks or the financial institution would offer, right from starting them off with a starter credit card or a savings account, moving on to a student loan, a checking account, again, as they progress through the life to lifestyle-specific credit cards, being able to offer personal loans, mortgages, and then all the way through retirement planning and wealth management, right? So that's the future that is possible if we are able to create a core customer 360 capability, which cuts across all the different silos which Bryson was talking about, and then be able to leverage all of the analytics capabilities that could be built on top of that, and then equip your institution with insights that could latch on to the triggers that customers are sending your way, and then be able to capitalize on that opportunity and play the digital trend to your advantage.
Yeah, thanks, Asif, and I agree. I think that's extremely exciting. So what happens once you achieve that panacea of customer 360 and analytics? Well, the first thing is that your customer engagement is seamless across channels. Whether your customer is interacting with the bank from an online channel or a traditional offline channel, such as a branch, the experience is consistent and seamless. Anything that you offer to them in terms of cross or upsell is timely and it's relevant, and you're not flooding the person with offers that once they see the first two offers that are irrelevant to them or they don't care about, they're probably going to start ignoring the messages that are coming from the bank. So it's important to not overwhelm your customers, and that's certainly possible. Customer service issues is another key area, right? If you have a consistent and holistic view into a customer, you're able to quickly identify what the issues are and resolve them timely and satisfactorily. Customers are also contacted during the method that they prefer, using the method that they prefer, the channel, as well as the right time of day, right? Again, so that you are not frustrating a customer by calling them in the evening when perhaps they don't like to be contacted, and you're making sure that their overall experience with the bank is a positive one.
Another big benefit of having this kind of an infrastructure in place to support your business decision-making process is the amount of time that gets spent on value-added tasks, right? So when we talk to practitioners, irrespective of which industry vertical our clients are in, right? So the amount of time that gets spent in gathering data, entering and preparing data for insight generation is just a lost time in terms of how much time gets spent out there, right? So with this kind of a core foundation in place, manual and duplicative processes are eliminated. The time spent on analyzing and remediating data quality issues is reduced. So the actual business decision makers and data scientists who are equipping the decision makers with insights, they're able to spend more time on driving insights, and they're able to spend more time analyzing the data and coming up with new ways to leverage that data to identify opportunities for the bank.
So the next thing that improves is a modernized IT infrastructure. As a part of these digital transformations, and this is kind of something that comes with an approach like this, you want to leverage new technologies, but you don't want to be too bleeding edge, of course, right? You want to use technologies that are proven, dependable, but are also going to stand the test of time and deliver what you need them to within your environment. So ultimately, when you implement foundations such as this, you do end up modernizing your IT infrastructure, which can reduce administrative and operational costs. Oftentimes, these architectures are in the cloud, which come with the benefits of consumption-based billing. Even software companies these days are switching to more subscription models. So the barrier to entry is lower, and the incremental cost is consistent and expected and forecastable. Environment scalability and security is improved, especially with some of these cloud technologies. Being able to scale up and scale down on demand, based on demand, is huge. And leveraging the hardware that is available to build fault tolerance, high availability, disaster recovery from the start is a huge game changer. Also, the design to implementation time frame for projects is reduced. And when we say this, what we mean is if you have data that is understood, high quality, accessible, and secure, any projects to migrate a system, for example, retire a system, or perhaps to build new models using the data, that the time it takes to do that is significantly decreased because you have the starting point. You have the data that you can trust, that you can use, that is available to you. So the time spent gathering, preparing, and potentially fixing data is drastically reduced, which accelerates your project timelines. And lastly, and we mentioned this one earlier, but being able to adapt to future requirements, changing IT landscapes. We all know that things will change. In 5 years, the IT landscape is going to be very different than what it is today. And you want to build your systems and your data layer with that design consideration in mind, the ability to flex and adapt when things ultimately will inevitably change.
Yeah, and then another benefit of this kind of system is it significantly enhances your competitive advantages in the market, right? So again, this is a term which, especially in retail, it keeps getting used a lot, where every customer talks about creating a defendable moat around your customer base through the use of data, right? So every retailer today, they know that they're competing for mind share, they're competing for wallet share, competing for market share, and they want to use data to their advantage, right? So for example, again, just going back to the examples of Walmart and a Target, right? So in the past, they could afford to have like millions of customers who were like buying from them month after month without fail, and then Walmart not tying all of that information together to use it to their advantage, right? Today, every retailer knows that if another retailer knows about my customers more than I do, then it's just a matter of time before they're going to come up with proactive strategies to take those customers away from me, right? So retail industry especially uses customer data as a moat, and we see that there's no reason why banking should not be using the same strategy as well, right? So again, being able to build all of your customer data that you have, right? All of these different pieces of information which Bryson spoke about, bringing it all in one place, equipping the decision makers so that they not only know your customers' current needs, but they're able to proactively anticipate future needs before the customer actually goes into the market to look for products that satisfy those needs. And then being able to, since you know about their, for example, their income, their savings, their spend patterns, like using all of that information to offer them and be able to more accurately estimate their risk and worth to the new product line that they're looking to add to their portfolio, and be able to proactively offer them sweet deals or like competitive offerings to make sure that you can almost shut out your competition, whether it be like, for example, favorable rates on mortgages or like auto loans or even benefits for like retirement planning and those kind of things, right? So all of these become advantages you can leverage in the market to make sure that you not only retain your customer base, but then are using it proactively to grow your customer base, right? So again, as the market evolves, being able to use new data and systems, whether, I mean, even if you're growing organically or even inorganically through M&A activity, right? So be able to quickly integrate diverse systems to be able to leverage new data, new insights that's been injected into your system, bringing it all together in quick time and being able to leverage it to your advantage.
And then the last piece we'll speak to is risk management and compliance. What a foundation of Customer 360 and analytics does, as we've been describing throughout this presentation, is allows you to aggregate exposure and risk at the customer level and make sure that that data is accurate and available. It also allows you to reduce your exposure to penalties from compliance actions. We talked about GDPR and CCPA earlier. Those come with very significant fines, but also brand harming incidents where, you know, obviously we all see the headlines when any company is hacked. So we want to minimize the risk of that happening. It also allows us to adapt to changing regulations. And this one is particularly important when it comes to privacy, because every one of these new privacy regulations is a little bit different. They come with different requirements in terms of opt-in or, excuse me, what is opt-in referred to as the right to know or right to be forgotten. And it's important that you build your systems with a changing regulatory landscape in mind so that you can meet the future needs that will be coming in terms of compliance. It also allows you to enter new markets, right, more effectively because of those regulations concerns. So overall, the foundational data capabilities that Customer 360 and analytics brings allows a consistent and effective way to manage your risk and comply with a regulatory environment that is consistently changing. So how do you start? Achieving an omni-channel customer engagement strategy, like we've been discussing, seems daunting, and it is. It requires a strong data foundation, and some advanced and innovative analytic approaches. But what's important to keep in mind here is that it's not an IT project. These programs are successful when there is a strong partnership between the business and IT in order to achieve the most value out of these types of engagements. So where do you start? First, you need to develop a business case. Ultimately, you need to identify what it is you're trying to accomplish very specifically, and we've reviewed a few of the examples that you might use to build out a business case. But you need to identify what are the KPIs that you're trying to achieve through these projects so that you can demonstrate the ROI. Second, define what are the measures of success, right? What are the KPIs, but also what are the specific capabilities that you want to deliver. Today we talked about Customer 360 and analytics, but you need to get a little bit more specific than that. What are the very specific aspects of Customer 360 or insights that you want to fuel with Customer 360? And by when do you want to have implemented or achieved that level of maturity for those capabilities? Then you go to the point of design, right? And this is where the IT partnership really comes into play in force. You need to identify a modern, scalable, flexible, and sustainable architecture that meets the needs and the objectives of the business and will essentially be cost effective and, again, stand the test of time. You don't want to place your bets in a new technology that's unproven, and IT can help you to do that. And then lastly, you need to implement, right? So say what you want to achieve and by when. This is often a multi-year type of strategy, but there are invariably quick wins that you can target within a matter of months that will immediately add value for relatively low effort, right? So the journey is long, but there's certainly opportunity to deliver value along the way.
All right, thank you both so much. That was a great presentation. We did have a couple questions come in, so I'll get right to those. The first one is, how would you prioritize an initiative like this when considering budget constraints?
Yeah, I'll take that one. Thanks, Allison. And it really goes to the last point that I was just speaking on that last slide. When it comes to prioritization of the things that you want to do to add value to your organization, what we always advise our customers is to take a high-low approach to analyzing and prioritization. And what that means is you prioritize the efforts that are high value and low risk to implement. So you'll often hear those described as low-hanging fruit. Find what those low-hanging fruit are, pick those off first, but make sure that it aligns to the long-term vision and strategy and serves as a foundation to adding future capabilities and future value-add components. So you want to keep that long-term vision in mind. You don't want to just implement point solutions to address very specific needs.
Great, thank you. Second question, in what ways would the methodology differ from an organization like a small one-branch credit union to a multinational bank?
Yeah, let me take that one, Allison. So again, from the size and scale perspective, obviously the amount of funding that would be required would depend on the complexity of the infrastructure itself in terms of the number of data sources, the number of use cases, and then the size and scale of the overall operations, right? But then irrespective of the size of the operation, there are some core foundations that are almost necessary today. It's not something which is nice to have. It is almost something that you need to have, is having a core Customer 360 foundation and some basic capabilities around being able to understand your customer, be able to map out their customer journeys, and be able to embed analytical models that trigger certain actions in your overall customer engagement strategy, right? So again, how much in terms of is the investment required? It would depend on a case-by-case basis, but then there is an opportunity to learn to walk before you learn to run. So basically, again, going back to what Bryson was talking about, right? Being able to prioritize some of those areas which are the low-hanging fruit, and then taking on some of the other areas which are more investment intensive.
Great. Well, that was it for questions. If anyone thinks of a question after the webinar, please feel free to reach out. There is a contact slide here after this one. Also, if you could go to the next slide so people can take a look there. Feel free to reach out to us. Like I said, this webinar will be posted online, so keep an eye out for that in the next couple of days. Everyone who registered will get an email with a link to that as well. So thank you all for joining. Any last words from you guys?
No, we're very excited to share our viewpoint on this industry, and thank you all for joining. I hope that you all reach out to us offline and continue the conversation. So it was a pleasure. Thank you all for attending.
Thank you both.